Ryan had a question he'd never really gotten a clear answer to. How does the stock market actually work? He'd heard people talk about it his whole life, on the news, at work, at family dinners. And every time he nodded like he understood. But he didn't, not really. He knew stocks went up and down. He knew people made money. He knew people lost money. But how it all actually worked, that part was a bit fuzzy. So one afternoon, he finally typed it into Google, and he got completely overwhelmed. If this sounds familiar, you're in the right place. By the end of this video, you'll understand exactly how the stock market works. Not the complicated Wall Street version, the real version, the one that actually makes sense. Hey, I'm Larry, a semi-retired electrician who's figured out simple money systems that actually work. And stick around until the end, because I've got a free gift that'll help you take your first step. So if the stock market has always felt like something other people understand and you don't, this one's for you. Because today, Ryan is going to learn how all this works from the very beginning. And by the time we're done, it's going to click in a way it never has before. Let's start at the beginning. A stock is ownership. That's it. When you buy stock in a company, you're buying a tiny piece of that business. You're not lending them money. You're not making a donation. You're becoming a part owner. Ryan thought about this for a second. So if he bought stock in a big sneaker company, he'd actually own a small piece of it? Yes, that's right. Think of a company like a pizza, a very valuable pizza. The owners cut that pizza into millions of slices and sell those slices to investors. Each slice is a share of stock. When you buy a share, you own one of those slices. If the company grows and becomes more valuable, your slice becomes more valuable too. If the company struggles, your slice loses value. That's the entire idea behind investing. And Ryan's next question was a good one. Why would a company sell pieces of itself to strangers? And the answer is simple. Because growing a business costs money. Imagine you've built a successful company and you want to open new locations, develop products, hire employees, and expand. You need money to do all those things. You could borrow money from a bank, or you could sell pieces of your company to investors. And that's what an IPO is, an initial public offering. It's the moment a private company offers shares to the public for the first time to raise capital. Investors buy ownership, and the company receives money to grow. The investors get ownership, and the company gets fuel. That made sense to Ryan. The company needs money to grow, and investors want a share of the upside. So everybody has a reason to be at the table. But Ryan had another important question. Where does all of this actually happen? Where do people actually buy and sell stocks? And how does someone like Ryan even get involved? Stocks are bought and sold on exchanges. Think of them as giant marketplaces where buyers and sellers meet. The two best-known exchanges are the New York Stock Exchange and the NASDAQ. Years ago, trading happened on crowded trading floors, like the ones you've probably seen in movies. But these days, most of it happens electronically. Ryan doesn't call Wall Street. He doesn't need a broker in a suit. He simply opens an investing app on his phone, places an order, and the exchange matches him with a seller. Money changes hands, ownership changes hands, and that's it. The entire system that once felt out of reach now fits in his pocket. But here's the part that confuses most people. Who decides what a stock is worth? And the answer is everyone and no one. The stock market is basically a giant auction. Millions of buyers and sellers constantly make decisions about what they think companies are worth. The price you see on your screen is simply the last price someone agreed to pay. This also made sense to Ryan. He thought about when he sold his guitar online. When he had 50 people message him within an hour, he realized he had priced it too low. And when nobody responded for a week, he realized he'd priced it too high and then lowered the price. The stock market works the same way, except instead of one guitar, there are thousands of companies being valued all day long. If there are more buyers than sellers, prices rise. And if more sellers than buyers, prices fall. But before Ryan actually invested, he followed the stock prices of a company, and one morning, he saw the company had fallen 8% overnight. The stores were still open, employees were still going to work, but investors suddenly believed the future looked worse than it did the day before. And that changed the price. There are two forces at work. The first is the fundamentals: revenue, profits, debt, and competition. Over long periods, these are the numbers that matter most. The second is sentiment: how investors feel about the future, whether it's good news or bad news. A new product. Maybe there's a new CEO. Whatever the reason, sentiment can move prices quickly, sometimes faster than the facts. And when you put those together, you get the daily noise of the market. Prices moving up and down for reasons that often seem random. But here's what matters. Over very long periods, broad stock markets have historically moved upward, even though individual companies fail, and markets sometimes decline sharply. Patient investors have generally been rewarded. So that daily noise isn't the point. It's the long game that matters. Ryan thought about everything he'd learned. Stocks are ownership. Companies sell shares to raise money. Prices move because buyers and sellers are constantly making decisions. And the long-term history of the market has rewarded people who stayed invested. But what does Ryan actually do with all this info? First, understand that the stock market isn't a casino, it's a marketplace. And like most marketplaces, it rewards people who stay consistent and don't panic when prices fall. Second, you don't need a lot of money to start. Most investing platforms allow you to buy fractional shares, meaning you can own part of a company with only a few dollars. Third, time is the most powerful force in investing. Not timing, time. Most successful investors aren't trying to beat the market every day. They're buying businesses or diversified funds and giving those investments time to grow. The longer your money stays invested, the more opportunity it has to compound. Ryan didn't need to become a Wall Street trader. He just needed to start. And more importantly, stay. Here's the thing nobody tells you about the stock market. The hardest part isn't understanding it. You've just done that. The hardest part is staying calm when the market falls, because it will fall. Every successful investor has experienced periods when their account was down. And that's not a flaw in the system. That's just how the system works. And the people who succeed remember what they actually own. It's not a number on a screen. It's a piece of something real. A business, with employees, with products, and with customers. It's a business that exists in the world and is trying to grow. And when Ryan finally understood that, the stock market stopped feeling like an intimidating place where people lose money. It started feeling like what it actually is. One of the most powerful financial tools available to everyday investors. And once you understand that, the next few steps become surprisingly simple. Open an investment account. Start small. Invest consistently, and give your money time to grow. That's it. Not trading, not predicting the market, and not getting rich overnight. Just taking the first step and staying in the game. If this video helped you understand how the stock market works, hit like and subscribe. I break down real financial concepts like this every week. And leave a comment below. What's one thing about the stock market that surprised you? I read every one. And here's your free gift. I put together a guide called Your First Stock, a Beginner's Guide. It'll walk you through those first steps and help you get started when you're ready. You can download it in the description below. And if you want to go deeper on what type of stocks to buy, watch this video next. And remember, if this electrician can do it, so can you.